Ladies and gentlemen, good day and welcome to Prudent Corporate Advisory Services Limited 2Q FY’25 earnings conference call hosted by FY’25 Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Lalit Deo from FY’25 Securities. Thank you, and over to you, sir.
Yeah, hi, good morning, everyone. Wish you all a very happy Diwali. Welcome to the 2Q FY’25 result Concall of Prudent. So, to give a brief update on the result and address investor questions, we have the management of Prudent Corporate Advisory Services Limited, represented by Mr. Sanjay Shah, Chairman and Managing Director, Mr. Shirish Patel, CEO and Full-Time Director, Mr. Chirag Shah, Non-Executive Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh from Investor Relations. Now we would request the management to start with the opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, dear. And first of all, let me wish happy Diwali to everybody who has joined this call. I welcome all of you to this earnings call. I thank you all for sparing your valuable time to join us today. I hope you have the investor presentation handy, which we have uploaded on the exchange yesterday, as we'll be giving references to the various slides of the presentation. So before I move to the discussion on quarterly numbers, I just wanted to update you on the key milestone which we achieved during the quarter. Our asset under management crossed 1 lakh crore on 26th of July, almost 1.5 years before our guidance. It's mainly due to significant mark-to-market movement by Indian markets. The next milestone which we are working towards is reaching a SIP of 1,000 crore by March 2025. So this is the introduction. Now let me tell you to move to page number 41, slide number 41. So now coming to Prudent numbers, I would like to go to slide number 41. This chart on the left-hand side indicates that the tailwind for growth in mutual fund business in second half of this fiscal. In the first half of FY’25, we earn our revenue based on a daily average AUM of 95,701 crore. We began the second half of FY’25 with an opening AUM of 1.07 lakh crore, which is almost 12% higher than the first half's full year average. Despite the correction post-September till date, our current AUM is still above 1.04 lakh crore. Hence, even if this number sustains for the second half, our revenue growth in second half compared to first half should be higher by 10 to 12%. As far as quarter is concerned, our quarterly average AUM in June quarter has grown 53% YOY and 14% sequentially to 1.02 lakh crore. Now please move to slide 42. On this slide, we have shared the details of what moved our equity AUM on a year-on-year and quarter-on-quarter basis. As seen in the left-hand chart, closing equity AUM has moved higher by 59% year-on-year to around 1.03 lakh crore, with almost 3/4 of the movement being contributed by mark-to-market gain. The mark-to-market gain for the trailing 12 months stood at a very strong 28,600 crore. If you see the right-hand chart, which shows the movement in equity on a sequential basis, and our equity AUM has also moved sequentially by 12%. Net equity sales during the first half of FY’25 has been really very strong. In the FY’25 first half, our net equity sales stood at 5,700 crore, which is almost, or you can say equivalent to the net sales in the full year of FY’24. So that shows that how strong the first half was as far as acceptability of the mutual fund and participation of retail is concerned. Now please move to slide 43. Moving to slide 43, wherein there is a detail of our market share in overall equity AUM and the SIP data. Our market share in equity AUM ex ETF has improved from 2.51% year before in September 23 to 2.52% in September 24. On the bottom left, we have given our data on monthly SIP flows and our market share in SIPs. During the month end, our monthly SIP book has touched 870 crore. We have added 280 crore to our SIP book during last 12 months, and we are confident to touch the mark of 1,000 crore by March 2025. In the month of September, we collected 115 crore through STP, Systematic Transfer Plan. This number is reported by us on the actual realized basis. The STP value of 115 crore is not included in the SIP number. So if you look at SIP and STP numbers together, almost 1,000 crore is invested systematically by Prudent's retail investors in equity and hybrid every month. Now let me tell you, let me take you to the slide number 46. So now let me turn to the current financials. So please move to slide 46, which is the last slide of our presentation, which talks about our standalone number. Please note that we have merged Prudent Broking Services, a wholly owned subsidiary, with Prudent Corporate, and hence standalone numbers are combined for mutual funds and the broking business and has been restated for all the periods which are reported in these presentations. It's an extremely satisfying quarter as far as revenue and the profits are concerned, as both has grown by 53% and 73% respectively. Sequentially, mutual fund revenue have grown in line with the growth in quarterly average AUM. Last quarter, which was the April, May, June quarter, as we already communicated last time also, we had one-off revenue impact of 4.41 crore, which was mainly due to the receipt of withheld brokerage released following the relaxation of KYC norm prescribed by the SEBI. As a result, our yield was higher by 2 basis points in the last quarter, which is April, May, June, at 92 basis points. If we adjust for this one of the item of the last quarter, our yield has remained steady sequentially at roughly about 90 to 91 basis points. Additionally, on the yield front, I just wanted to communicate about a couple of changes which has occurred. Prominent being the HDFC AMC, and as all knew that HDFC AMC has revised rates on the back book, that means the existing book, for most of their non-debt schemes. Nippon has also revised rates in one of their main scheme, Nippon India Small Cap Fund. This back book rate revision were primarily due to significant rise in assets caused by a sharp mark-to-market movement in last couple of years. We do not expect this to be a regular occurrence, as it was mainly due to exceptional mark-to-market movement. Just to explain how significant the impact of mark-to-market movement is concerned, I'll just tell you that Prudent's total AUM in the March 2020 was less than 20,000 crore, while as I explained you earlier, in last 12 months, our mark-to-market gain is above 28,000 crore. So that shows that how significant mark-to-market gain has been in last couple of years. So now if I'll explain about the impact of these changes which has occurred because of the HDFC and one of a big scheme of Nippon. The full year top line revenue impact for this change is estimated to be around 6 crore, which is less than half basis point of our total revenue. So I think even though it's a revision the back book, overall if you look at the impact may not be that meaningful. This time we also absorb the part of rate cut and transferred partially to our sub-distributors. If you remember, we have been all the time otherwise saying that if there will be some change, we'll be able to transfer fully to the sub-distributor. However, in this particular time, we also absorb certain amount of reduction in the revenue which has been absorbed by us. However, I'll just tell you that the overall impact on us because of this revision is neutral as far as impact on GP margins are concerned. So now coming to the commission and fee expenses. If you look at commission and fee expense payout at 63.4% is looking bit elevated compared to last quarter, largely on account of one-off as talked about pertaining to the receipt and payout of the partner related to relaxation of KYC norms. Adjusting this, payout ratio has also increased by roughly about 60 basis points. This mainly because of movement in the direct and the indirect mix, wherein the indirect share has now again moved to 89.5%. So if I tell you about this quarter, the share of indirect has moved up by another 0.7 basis points. So I think that is broadly I'm just trying to explain. Also, I'll take you to another expense item, which is the employee expenses. So you would have observed that the employee expenses are also increased by 8% sequentially. There are various factors which has led to this increase. First being the net addition to the employee count. We added 58 new employees during this quarter. Also 78 employees were added in the first quarter of FY'25. Around 45 of those who were added in the first quarter were added in the June alone. Hence, the last quarter was having the additional salary expense for only 2 months. So second factor was increase in the variable provisioning. Given how the business is shaping up for the entire year, we expect variable pay to be at the higher end. Hence, sequential increase in variable provisioning is around 25% more. Third factor is leading to increase in employee costs in some extra provisioning taken for the leave compensation. So we have changed the policy of allowing the accumulation leave, which somebody can accumulate till the retirement. We have moved from 65 leave to 100 leave as an accumulation policy, and hence the provisioning has increased. So all these three put together has led to sequential rise in the employee cost. Overall, after considering all these things, operating profit grew by 60% YOY. There was a margin expansion of 110 basis point YOY, and operating margin during the quarter stood at 23.2%. A strong operating performance coupled with higher other income has led to a profit growing at a healthy pace of 73% on a YOY basis. Now coming to slide 45, one slide previous, which is providing you the consolidated numbers. So if you look at the difference between consolidated numbers and the standalone, I think it is only the standout number would be the difference between these two would be the insurance only. So if you look at on the insurance front, our insurance revenue grew by 35% YOY to 34 crore. On account of changes in surrender value from 1st October, there might be a changes to the life insurance commission structure post 1st October. The negotiations are going on with the insurance companies, and we are yet to get full clarity on the rate structure. However, the broader indication is that the insurance company might resort to reduction of commission as well as clawback based on the persistency ratio. I'm just giving you this explanation. However, this has no impact in the second quarter because whatever impact which will come now as far as revenue on the insurance is concerned. So overall, I think the only item which I wanted to explain the consolidation was the insurance number. So overall, consolidated profit grew by 73% to 51.5 crores. So overall, it has been a very, very satisfactory quarter. For the first time on a quarterly number, we crossed 50 crore of net profit, which is very, very satisfactory for all of us. With this, I'll just keep the floor open for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Lakshmi Narayan KG from Tunga Investments. Please go ahead.
Thank you. Sir, if I just look at the total AUM which we have, which has gone through us, what's the mix of index fund and non-index funds?
So the index fund won't be more than even 1,000 crore in my total AUM because we don't have any kind of passive book at all, because I think we believe our advisors are capable enough to identify quality fund manager and a quality fund. So I think the index is hardly about 2,000 crore. Yeah, it's roughly about 2,000 crore. So it's less than 2%.
Right. And in terms of the top 10, AMCs, do we work with all the top 10 or we don't work with couple of them?
Sorry?
Yeah, we work with all 10 top 10 AMCs. So practically, if you see the AUM mix, moti, it would be in line with what the industry is all about. So yes, I think because we being retail, we cannot ignore working with the bigger AMCs. So that answer to your question, we work with all 10 big AMCs.
Right. Third and last question, if you can just give a split of your AUM by large cap, flexi cap, and X of large and flexi cap.
So I think the readily breakup may not be available, but I think the that also series would be in line with market only, right?
Yes. Yes.
Okay. The reason we're asking this question is that if you look at the last 1 month or maybe the last few days, you see there is a marked decline in a particular segment of the mutual, the indices, right? So just want to understand the sensitivity for us on that account. Is it in line with the overall mix which you get from AMFI, so that you are sensitive
The mix of hybrid would be little higher in our case compared to the industry, but otherwise in the mix of equity, that is large, mid, and small, it moti, I think probably I would say that we would be following the industry.
Got it. Thank you, sir. I'll come back to you.
And another thing I just wanted to explain about the sensitivity of our AUM. As I told you, the last month we ended at 1,07,000 crore, and currently after about 7.5% fall, yesterday our AUM was 1.04 lakh crore. So definitely there will be a net sales also, but however the impact on AUM is 3.5%, while the overall market has gone down by 7.5%. So what series also said that our share in the multi-asset and the dynamic asset allocation of the hybrid category would be higher in the market, plus you have regular flows also.
Got it, sir. If you could just give us what is the mix of multi-asset and hybrid in our incremental flows. For example, in the last 6 months, you would have got incremental flows. In that, what is this proportion of multi-asset and hybrid?
So currently I'm just talking about, let us say first of the AUM. 18% of our AUM is in hybrid category, including the multi-asset, you can say. So 18% of our AUM is in this category. If you are talking about a business, I think we actually need to get the actual number, but let me check if I can provide you. I think, Sanjay, we can take this question separately because I think the data is not handy right now. So
sure, sir. I'll take it separately. Thank you so much. Happy Diwali, sir.
Happy Diwali.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Niranjan Kumar from Equirus. Please go ahead.
Good morning, sir. Thank you for giving the opportunity, and congratulations on the great set of numbers. So I have a few questions. So the first question is, during the quarter, have you seen any impact on the account of the broker code change regulation?
So already we have started getting a few change of broker code requests in our books. At the same time, we also would have lost little, but the net addition is much higher compared to the loss of AUM. Revenue-wise, still the revenue recognition is not yet started because now from September onwards we start getting the tail commission. So revenue front, there would not be any impact because of change of broker code. But in terms of addition of the AUM, it would be positive. We have not started aggressively going after this. I think last call also we said that we will be the beneficiary of this change in the rule, but we are not going very aggressive in the market to acquire the assets due to change of broker.
Okay, sir. So my second question is, you have already mentioned that HDFC AMC has and Nippon AMC have sorted to back commission, cutting the commission on the back books. So further, how should we see this in the overall context, like in the industry or on the impact which we might have?
So as and when we see huge mark-to-market gain in any AMC, in addition to that, if the same AMC or the same scheme is also attracting huge flows, the TR chargeability of that scheme or that AMC goes down. Now, since few of the AMCs have already passed on the TR cut to the distributors, I'm sure many others may follow as and when they start feeling the pain of the TR cut. So this is started. Yes, I think few AMCs might follow this, but as Sanjay Bhai said in his call that we could be able to pass on the percentage sharing. So I think on an overall basis, whatever we are passing on to our distributor, hopefully in future also, whenever any comes from the AMC, we'll be able to pass on proportionately so that our GP might not get impacted. But yes, many AMCs might follow this going forward.
Okay, sir. Thank you. Thank you for the information. That's useful. That's it from my side. Happy Diwali, everyone.
Happy Diwali.
Thank you. The next question is from the line of Dipanjan Ghosh from Citibank. Please go ahead.
Hi, good morning, sir. So just a few questions from my side. First, it's a data cleaning question. If you can give your market share, in the new MFD addition. So let's say if 100 or 1,000 new ARNs are getting created, let's say in 2Q or 1H, what would be the proportion of your acquisition of this new MFD? So just wanted to get a sense of, you have added like thousands of MFDs in the quarter. What would be the mix between, let's say, new ARNs versus existing ARNs and the market share in new ARNs? Second question is now on the flow part. If you can give some color on what would be the breakup between NFO and non-NFO led flows. And also within the overall flows, qualitatively over the, let's say last 2 to 3 years or during your, over the last decade, how do you see the flow mix changing between, let's say, existing customers, let's say with a vintage of 1-2 years versus new customers, or versus old customers? Third question is, now this backbook repricing that HDFC and Nippon have done. What I would want, and we have heard from 2 other competitors who have not done, who are also listed. I just wanted to get some sense. Is it also a function of, you mentioned that, there has been strong traction in flows in select schemes of these AMCs, and that has probably propelled them to kind of take this decision. So I want to get an understanding of how does this change the market dynamics in terms of your ability to kind of, swing flows towards other AMCs, or in terms of the underlying distributor, the granular MFD, how is their mindset really changing? Because there are a lot of new AMCs also that is coming up. There will be new asset classes coming up. How does the entire dynamics change? So those were the 3 questions.
Yes,
so in terms of cut, few AMCs have cut it. We are sure that many other AMCs might follow as and when they start feeling the pain. As you said that how the dynamics would change in terms of flows towards the smaller or the mid-size AMC or the mid-size schemes. Now, obviously, I think many of the distributors might start seeing where they can improve the revenue. So you could see that in the industry also, a few of the AMCs or the few of the smaller schemes have started gaining some kind of traction. But having said that, as a distributor, we also try to give the schemes which distributors believe that are consistent in performance. So though we would like to influence the flows, but most of the time still because of the scheme's consistency in the performance, we might not be able to do. So overnight, you can't say that the flows will move from the bigger schemes or bigger AMCs to the smaller AMC, but over a period of time, some kind of flows we might see. But that might not change the yield immediately. Coming to your second point, that the flows between NFOs and non-NFOs, obviously, I think last 6 months, the number of NFOs came in the industry were many. We didn't participate in all the NFOs, but having said that, out of almost, you can say, around 10 to 12% of our business on this finance or these 6 months would be towards NFO. So our share in the NFOs would be little lesser compared to the industry, mainly because of our SIP book. So percentage share of NFO in the gross share would be little lesser than the industry. And secondly, we don't participate in all the NFOs. So that is another reason. Third, you said that how the recruitment of MFDs is there in the system. To give you the perspective, last entire financial year, we added some 3,100 new ARN holders. While we are talking, we already have added more than 2,900 ARN holders. So versus the entire year, 12 months, 3,100, we added 2,900 this year. So practically the the ARN recruitment is getting momentum. Out of the industry, my guess is that last year industry recruited, Sanjay bhai, correct me if I'm wrong, I think some 22,000 ARN, who new ARN holders were added in the industry last year, and out of that, we added 3,100. So that is what the numbers are all about.
Yeah. The precise number is 23,000 and we added 3,100. Yeah, you're right.
Yep.
So just to follow up on the last bit, for this first half, and especially for 2Q, because your MFD additions have been very strong. So has something really changed in the industry, or how do you or your kind of expansionary plans have become more aggressive?
So one, we added few branches in first quarter, so that has helped us in getting more number of MFDs. Second is we also have increased some spend on social media to make Prudent as a brand and attracting MFDs to the Prudent platform. So that is another reason. And third, I would say that our focus for new MFD recruitment has gone up significantly compared to the last year.
Sure. So just a small question on the insurance business, the premium, the fresh premium growth in both life and non-life has kind of moderated in terms of YOY when I compare with, let's say, FY'24 or 1Q'25 trends. So on the life side, would it be like slower non-par, and on the non-par side, what would kind of explain this moderation in pace of growth?
So on the health side, the growth is decent. It's a good growth on the new premium on the health insurance side, that is the general insurance side. In the life insurance side, yes, you can say that the first 6 months business is a moderate growth, mainly obviously because of all the noise of the changing in the regulation. And obviously, I think our business, as you know that most of our POAs we try to convert from our mutual fund distributors. So when the equity will do better, maybe I think some impact in the insurance business when the equity market or the mutual fund business is doing great.
So it would be fair to assume that within your non-life, almost 2/3 or more will be health?
It's almost, I would say, health in non-life. Motor we hardly do.
Yeah.
Okay, sure. Thank you, sir, and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Aox Frederick from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Congrats on a very good set of numbers. Sir, one question. The 6 crore impact you're talking about, that is on the current basis, right? Meaning if we are to assume a current AUM on 234 crores, 6 crores is the impact we are talking about in the subsequent quarters.
No, 6 crore which I talked to you about the full year impact. Assume that in my 1 lakh crore, I think the HDFC is roughly about 11,000 crore. And in 11,000 crore, I think they have made changes based on certain formula. So based on those formula, the overall impact on the HDFC AUM for the full year would be about 6 crore. So I was just trying to explain you that on the 1 lakh crore of AUM, if I'm going to on, let's say, 1,000 crore, I think my impact would be about 6 crores. So I was saying that my total impact, even though 11% of my assets got repriced, I think the impact is less than half basis point.
Okay. This is for that 11,000 crore, 6 crore is the revenue impact. Okay, got it.
As far as other way around, if I tell you, if you look at the numbers, I think the 6 crore divided by 12, roughly about 41 lakh rupees is the impact for last 2 months. So I think the revenue, so I think it implemented from 1st of August. So August and September, only 2 months got the impact in last quarter.
Okay.
We got the revenue less by about 80 lakh rupees, and the payout has also decreased by. So I think the GP has remained constant, but the revenue impact is about 80 lakh rupees in last quarter.
Okay. You are talking about GP margins, right? It's being still.
Yeah, income has gone down by 80 lakh rupees and GP margin has remained constant.
Got it, sir. Very helpful. And sir, number 2, let me flip it. It's a hypothetical question. Assuming that markets are correcting, any chance of this getting reversed, sir? Because we are talking about this cut because of markets being so buoyant. So when it's coming off, are we having that clause, or this is just a one directional move?
I think it's very difficult because I don't know, we have not gone into that domain. But ideally, what we believe is that we may not reprice the assets with whatever they have taken away because of increase in the TR. To an extent, whatever they have recovered they can technically give back, but I think legal interpretation is something which is really difficult to tell you because
Okay.
that might be also because on one side the regulation doesn't allow you to reprice the assets upward. Upward revision is not allowed. However, what you are asking about the cut which has been done by them because of significant rise in the AUM, if the same benefit goes to them because of significant fall in the AUM, to an extent they have recovered from us, can be given that. I don't know. Is my hypothesis.
Okay. Okay, sir.
But one point to add, the yield on the, if you are saying that the market going down, the TER goes up, the yield on the new business at least might increase because normally the new business commission or the pricing is linked to the TER. Though the historical yield might not change, if the market goes down and TER increases, then the yield on the new business can go up.
Okay. And so secondly, my understanding was that the old book or the stock, usually it doesn't get repriced. But is this the first time you're seeing the stock getting repriced? Historically, has this been done?
What you are saying is right. Historically, this was not happening, but post 2019 TER guidelines, this is the time I think we can say that the market has seen this kind of rally. And at the same time, the flows are very, very great in a few of the AMCs. So that is where we said only those AMCs wherein the mark-to-market gain is huge and the flows are very, very high. These AMCs or those schemes are impacted severely. And maybe these AMC or these schemes might cut. I think it was again who will do the cut first. Now I think since few AMCs have already done this cut, many other AMCs might think that others have done it. We might as well do it. So that is where we are hoping that you might come to cut the rates.
Okay, sir. Very, very helpful, sir. And congrats once again on a very good set of numbers. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is on the line of Saket Koda from Avendus Spark. Please go ahead.
Thank you for the opportunity. In this current quarter, we have seen that gross equity flows has been much higher than the equity SIP flow. So just wanted to understand that because markets have been doing well, there is a natural more demand for lump sum compared to SIP in the current half, or NFO has played a role to see a little more growth in gross flows compared to the SIP flows.
Historically, if you see then the market sentiments are great, the lump sum flows increases. And when the sentiments are bad, the lump sum flows will come down. So there is no other reason, there is no NFO impact. I don't see, as we said, that we don't participate in all NFOs and our NFO percentage mix is not in line with the industry. So this is mainly because of the market sentiment and hence the lump sum flows are higher than the last year.
Okay, now the reason I'm asking is that our market share in the SIP flows has also marginally reduced from 3.7% in the Q1 to 3.6%. So the kind of customers we are trying to cater are little more tweaked to lump sum. Is that reason, or you believe this SIP market share will come back to better than 3.8 what we witnessed in fourth quarter of last year?
You are talking about the SIP market share going down from September 23 to September 24. One reason definitely you can see that all these fintech are getting huge number of SIPs. So obviously, I think the growth of this fintech or the online SIPs has gone up, and the growth of percentage growth of online SIPs is much higher than the offline SIPs. That is one reason. Second, these numbers are so mainly I think we'll attribute this number to the fintech growth on this. Sanjay, any other point if you want to add?
No, I think if you look at the growth, you're absolutely right. If you take out about 30% is the market share, I think the market share of direct has gone up by about 8 to 10% in last 1 year. So if you take out the direct and if you look at only regular, I think either we are constant or we would have improved a few basis points. However, periodically we do not get the numbers from MFI about the direct and the regular on the SIP. Otherwise we can even report that number also. But we are unable to get the numbers regularly. But overall, I think what series is trying to tell you is mainly because of growing share of direct piece.
Then are you seeing this as a structural challenge for the indirect business for mutual fund industry? If more and more young guys goes towards fintech way to procure the business, then just I wanted to understand, I mean, any counter strategy we have to overcome this market share slide. Maybe today the growth is there, but if the growth slows down a bit due to market corrections, then how you want to overcome the challenge?
So one, definitely, I think earlier also we have said that in near term we believe that the growth of percentage growth of direct may be higher than the percentage growth of regular. Second, I would say that in last 3-4 years we have only seen the market going up. So obviously, I think these guys, those who have invested recently, have not seen the negative returns, and hence they probably might not understand the need of a advisor or a distributor. So that may be another reason. Third, definitely because of this fintech, because of this awareness about SIP, these guys have created this kind of awareness, and new investors. Probably, I think we might not have reached the every small villages, which probably the fintech with the direct plan have reached. So these are the only reasons. But yes, the strategy for us, definitely Funds Bazaar as a platform is becoming more and more popular. So in terms of technology, we are at par with these guys. In terms of reach, the number of distributors are definitely reaching to all these investors. With the social media, as I earlier also I said that we have started using social media more compared to what we used to do 1 year back. So that also could be one of the strategies for us to compete with all these platforms. And again, I would say that when the market might see some kind of correction, I think we can see some kind of consolidation in the share of a direct versus regular.
Got it, sir. Got it. And the second question what I had was, suppose most of the AMCs, every market remains buoyant, and most of the AMCs follow the same thing what these HDFC AMC and Nippon has followed. Then again it's a hypothetical question. Then if that book entire buy book gets repriced in a similar rate what HDFC has or Nippon has repriced, then the impact in your view for the entire 1 lakh crore or more than 1 lakh crore AUM would be how much?
So first of all, I think taking an assumption that all the schemes, all the AMCs might cut the book, I think which is not logical, because if the AUM size is small, the flows are not that big. If majority of the collection is with the new price, I don't think that all these things will make other AMCs to follow the same thing what HDFC has done. Yes, as we said that many others might follow in specific schemes where there is a pain, assuming that even HDFC has not cut in all schemes. So taking an assumption that the entire 1 lakh crore will get impacted, I think is little aggressive. Second point, I would say that for us, what is more important is what AMCs are doing with other set of distributors. Now, as we are B2B, and if the AMCs are cutting for their MFDs as well, we will be able to pass it on. So I don't see a problem when the AMC will come and say that I will only cut for Prudent and not for the MFD. So whenever any AMC or any scheme will cut the commission on the book, obviously they will cut for Prudent as well as other distributors, and hence we'll be able to pass it on the way the AMCs will do for the MFDs.
Got it. But our maybe top 5 MS consideration, which are little big, who can probably follow HDFC, how much they contribute to our over total 1 lakh crore, more than 1 lakh crore region? Top 5 AMCs.
So top 5 AMCs in terms of AUM.
Roughly about 36%.
So top
5.
Pardon?
Top 5 will be 52%. 52%.
Okay. So around 50% is top 5.
Okay, got it, sir. Got it. And lastly, on this broker code, have you really seen the bigger MFDs? I mean, you said that net addition is there to do the MFDs because the people have left and the people have joined also. So there is a net addition in MFDs because of the broker code. Any bigger MFDs which were significant contributor or decent contributor to you have seen moving out because of this thing? And as you rightly highlighted that your AUM yield or the revenue accretion is not happening because 6 months cooling period is there. So because of the net addition, any expected bump up will happen in revenue because of 6 months cooling period revenue recognition?
That AUM acquisition because of change of broker is not that big. As I said, that the number is not that big because we are not aggressively marketing, number one. Number two, as you said, that the way I think money will come, is there a risk of bigger distributor going out? Theoretically, if you always say that, is there a possibility? There is a possibility. But why we believe that it is less chance? Because the change of broker code theoretically should or will happen in a case when the distributor is not getting the commission on the existing assets. Or say, for example, my distributor come across any investor's investment, when he is not getting the trade, probably he will do the change of broker code. But the distributor who himself is getting the tail commission from Prudent, I don't think that he will be motivated to move the asset somewhere else in expectations of earning and by compromising 6 months tail. So that is where we believe that the chances of bigger distributor or any distributor of Prudent moving out with change of broker code, I think is very, very less. Yes, somebody else, some other distributor might take away Prudent's distributor's AUM. That is a possibility, but distributor himself might not do it.
Got it, sir. Perfect. That's it from my side. Thank you for the answer.
Thank you. Next question is from the line of Lakshmi Narayan KG from Tunga Investments. Please go ahead.
I just want to understand what is the net cash on the books as an end of the first half?
I think it's roughly about 430 crore. 440 crore. So actually, I think the cash on the balance sheet would be roughly about 400 crore. And because of the merger of Prudent Corporate with Prudent Broking, what we did is we haven't provided bank guarantee to the exchange, but we provided our additional cash in form of FD to that exchange. So I think that some 40-50 crore has been, even though it is a liquidity, but will not be visible in the liquidity. So all in all, about 450 crore. If I took away that FD to exchange, it's about 400 crore.
So what kind of income we generate on this cash? Because I see that the other income, what we see in the top line, seems to be a little underwhelming. So if you can just help me understand where the benefit of this holding this cash is captured in the income statement.
No, the entire cash is deployed in the liquid and liquid category. So it says either it will be in form of liquid or we might be holding some AAA rated bonds. So it's definitely into the debt category. We have small SIP going on since years.
What's the yield we get there, sir? I mean, what's the what is it that what's the yield we are getting there?
The average yield is roughly about 6.1, 6.2 kind of thing on the overall liquid portfolio. But other income which you are looking, that includes a lot of other business income also, like we distribute the FD bonds. Okay.
So I mean, our cash is high, and we also would generate significant cash this year also. But our dividend distribution has been lower. Now, what's the plan for the organization? What is your dividend distribution policy, and why do you need to hold a lot of cash? How is the organization thinking about this?
So the cash generation has started happening since last year, because previously we had the cash which was used for acquiring Karvi, and we believe there will be some acquisition which will be on the way. So I think we have been telling consistently that we would like to preserve cash for at least next 1-2 years, and we might see within 1-2 years we might reach a war chest about 800 crore. So I think we'll try, and we have been constantly looking for some acquisitions. However, if we are unable to identify something, then definitely we'll distribute. But at least for next 2 years, we'd like to preserve this cash.
Got it, sir. Thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Krupanshu from Thinkwise Wealth. Please go ahead.
Hi. Thanks for the opportunity. So I have one question on yield. So you mentioned that last quarter we had a one-off, which was to the tune of roughly 2 bits. And if we see this quarter, we've maintained our yield. And there was some rationalization because of B30 AUM in our yield, but I don't see any impact. In fact, we've got better yield. So I just wanted to understand and explain this. That's my first question. Secondly, we have this line item of distribution of financial and non-financial assets, right? So could you please give us a breakup as to what's the mix of, say, liquid loans, PMS, AIF, unlisted share, broadly? And my last question is more of, if you can just explain, like in the last 1 month, we've seen slight correction, right, in the month of October. So when Nifty was significantly down, say 1-2%, so what was the client's reaction? Like, it was what I wanted to understand from you. Like, were they increasing their SIP amounts? Were they putting in more lump sum or something? Some industry trend as to how customer behavior was, if you can give us some idea. Thanks.
So let me first of all address about the yield. So you said that in the first quarter our yield was a bit higher because of some prior period income which has been booked in the first quarter due to relaxation in KYC norms. That was about some 4.4 crore, which was roughly about 2 basis points of my revenue. So if you look at first quarter, yield was roughly about 92 basis points. If you take away that 2 basis points, our yield was in the range of 90 basis points. In the current quarter also, it is similarly in the same range, roughly about 90-91 basis points. Second, about B30, it's already out of the way since last February. So the B30 income was only there in the last year, but from February onwards, it was zero. So first quarter and the current year's second quarter, B30 is practically zero. Third, about the impact in the second quarter about the HDFC, as I said you, hardly about 70-80 lakh rupees is the lower income because of HDFC reduction in bank book. So I think the impact is very, very less. So overall, I think we believe the yield would remain more or less constant in the range of 90, even after all the adjustments are concerned. Second point about the other, yeah.
Just a follow-up.
Second point about, yeah.
This quarter, yields are 91.8 bits, right? If I'm not wrong.
Yeah, I think it's 91 basis points. So roughly, I think it's if we adjust, I think you're right. It's yield is showing the improvement of about some 70-80 basis points, but still we need to look at the current quarter to get it validated. So gross was also there. So I think overall you are right. Even if I adjust, the yield is still showing some amount of at least about 1 or half basis point elevated level. So let us look at whether it's a continuous improvement in the current quarter or it's the one-off item because of gross flows. Just need to validate that. Okay.
Thank you.
Coming to the breakup of our non-business. Yeah, so mainly it comes from roughly about 2.97 crore would be the revenue from liquid loan in the first 6 months. I think the PMS AIF would be about 4.2 crore, and the total. Yeah, then all the miscellaneous item would be less, and your small case and everything would be less. Now regarding third question about you asked about the
market coming down, how the flows impacted.
Yes. Yeah, I forgot this.
So basically, yes, I think when the last few weeks we can say that we have seen the market correction, and historically we have seen that when the first correction comes, more and more people participate in the investments, and if this correction continues for a few months, then probably we see the moderation of the business. Currently, if I look at my October business, probably I would say that in terms of new SIPs, we mostly will do much higher than my September number. So that itself says that the new flows have not got impacted. Even if I look at my fresh purchase for October, I think we'll be able to beat our September's number. So that itself says that this correction has not impacted the flows. But yes, if this kind of correction continues for a few months, we might see some moderation in the flows.
Understood. Thank you, sir, and happy Diwali.
Okay.
Thank you. The next question is on the line of Dipan Ghosh from Citibank. Please go ahead.
Hi, sir. Sorry, just a few follow-up now on this other financial products. This number has kind of stagnated around that 8 to 9 crore per quarter. So just wanted to get some sense of can we, kind of expect some traction on this number going ahead. And so second question is on basically this HDFC Nippon again. So correct me if I'm wrong, what I understood is the overall impact is around 6 crore annually. But because you have been able to kind of pass it on a bit of it to the distributor, net your 2Q impact was a few lakhs, like 70, 80 lakhs. Is that a fair understanding?
So, Sirish?
No, Sanjay Bhai spoke about the impact in the revenue in last quarter is around 80 lakh. The annual impact would be around 6 crore in the revenue. As we said that we will be able to pass it on to our distributor in the ratio of our sharing. So that is what we have spoken about. So 6 crore is the annual impact. Quarterly revenue impact would be around 1.5 crores. Out of that, we'll be able to pass it on in the ratio what we normally pay to our distributors. I hope I addressed your question.
So in the ratio of like 2:3, broadly, like 70-30 or 65-35. Something.
Yeah. So in the similar ratio. So every time the ratio might not be followed exactly because we need to see that what AMCs are doing for other MFDs in the market. So that varies AMC to AMC, but in the recent cut, we could manage to maintain our margin, not the GP margin.
Got it. And sir, on the other financial products, the absolute revenue seems to have kind of stagnated around that 8 to 9 crore.
So last quarter, because of this P2P guideline, there was certain reduction in the AUM. We gave the exit to the many investors. Last 2 months, we didn't do any new business in P2P. So mainly in the P2P product, the revenue has come down mainly because of the regulation change. All other product revenue growth is still there.
All right. So do you continue to foresee this segment going at, let's say, 30-40% plus, which has been the historical trend bit?
So except P2P products, yes, we can believe that this product revenue growth should be there. P2P, we are yet to evaluate the new avatar of the products, and then we'll take a call on the P2P.
So
otherwise, except P2P, all other products we are comfortable with.
Sir, my last question in that case will be, could you quantify P2P in FY'24 revenue mix within this particular segment?
So I think the FY'24 our revenue was about 5.5 crore from P2P. In first 6 months our revenue from P2P was about 297 crore, and we started the year with about 650 crore of AUM under P2P. When I'm talking to you now, that AUM has came down to 340 crore. So you can say that there might be an impact of about 3 crore. Roughly, if I assume that 300 crores remains stagnant, then my 50% income will come down.
Got it. Thank you. Thank you for the detailed explanation and all the best.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you very much for all the questions and everybody who has joined on this call. If there is any question which has been unanswered, Parth Parekh, who handles our investor relationship, as well as we all are available at the phone call away. So anytime you can reach out. And I wish everybody a happy Diwali and a very, very prosperous New Year. Thank you.
Thank you.
Happy Diwali to everyone.
Happy Diwali to everyone. Thank you.
Thank you. On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.